Amazon reporting that big increase in sales, bullish forecast being given, continuing a streak of rapid growth even as vaccine rollouts raise the prospect of less people shopping from home. I want to bring in Alex Mozet, who's the CEO of Applico, for his thoughts. And Alex, I know you're super bullish on Amazon. Why the muted or the relatively muted reaction in the stock? Because this was a really robust set of earnings across the board.
There's already a lot of high expectations baked into Amazon's current share price. Although if we take a step back and look at how their shares performed the past few months, Amazon and other members of that big tech, that FAMGA grouping, had many pullbacks on their share price just the past few months. And I think Amazon and recent earnings this past week have certainly proven that big tech is not going anywhere except for up.
So what changes when the economy fully reopens? Because I looked at the reaction in the share price and I did wonder whether there's still residual concern about what would happen in the post-pandemic world, right? Clearly, we're not really seeing that in this part of the numbers, but some of the year-on-year kind of guidance numbers perhaps showed that we are starting to see that trajectory come down somewhat.
For Amazon, I'm very bullish on Amazon, particularly relative to, say, an Apple, where you did see huge gains in Apple's hardware sales. But if we just look at the broad portfolio, these are platform monopolies. They have multiple different business units inside of them. Amazon is seeing 50% growth in GMV in 2020 versus 2019, just in their core business, which is the marketplace. Not even if we look at AWS and a series of other high growth businesses that they have in their wings coming behind that. So I think Amazon's unique amongst those big five, the FAMGA, Facebook, Amazon, Microsoft, Google, Apple, in the sense that their core business marketplace is still seeing huge growth, let alone some of the other companies, their core driver has seen growth, say the past quarter or two, be very strong. And I could see some of that pullback in their core businesses. Amazon's, on the other hand, has a very big pie, even in just e-commerce. So I think you see that in their share price when you look at their PE multiple and some other ratios, and you look at how Amazon is priced compared to some of their other big tech monopoly peers.
Broader EPS revisions already happening to the upside. This GTV chart on the Bloomberg showing that for tech, we continue to see it go higher and really outperforming the broader S&P 500. Who will be impacted most by potential regulations?
Well, it depends where you're talking about. If you're talking about in the US, Amazon should have the biggest regulatory risk because they compete very aggressively with their third-party sellers. They have Amazon Basics. They sell product directly from manufacturers as a one-piece seller, and then they have third-party sellers. They should have the most scrutiny. That said, I think we've seen other countries separate from the United States, like Australia, recently with what the Australian government did with Google and Facebook. We've seen a similar script being tried to be played out in Europe. I actually think in the United States, there's actually somewhat little regulatory risk for these companies. We hear a lot of murmurs and we hear a lot of clamoring. I just am somewhat skeptical that they're going to be able to land the plane and actually have any kind of material regulatory impact on any of these big tech monopolies.
Alex, just expand on your call on Twitter, because you don't sound very positive on the stock. What's the problem with the performance?
Twitter is a small platform company, tech company, right? They have a network effect, but they're a baby compared to the Facebook and the Googles, right? They don't have that monopolistic place. They don't have the same barriers to entry and the same compounding effect that you see in their network effects, right? They've really failed to innovate, particularly on executing to try and innovate. You know, they have a lot of false starts with new products, and they seem really bullish in the beginning, and then it peters off pretty quickly thereafter. So it had a really big challenge innovating, spinning up new business models. We see that even today with what they're trying to do, going up against kind of Substack and these kind of email newsletter, new type of business models where they're going to let you pay for tweets and these kinds of things. Just not very good innovation. I think the leadership could probably use a refresher. Unfortunately, their activist investor left current management in place. And we've seen their earnings that just came out today prove that point. Slow growth. And these companies are valued on what? Growth. And Twitter is not going to be able to sustain it, and let alone they're just scraping by already.
Alex, thank you so much for your insights. Alex Mozet, CEO of Applico.